I'm joined now by Thomas Harr. He joins us live from Singapore. He's head of Asian Forex strategy at Standard Chartered Bank. So, Thomas, is this a big concern that more companies will either move production out of Japan or perhaps even leave altogether?
I think it is a big concern, and the strength of the yen is likely to continue until such time where you see stronger action from Bank of Japan or the Minister of Finance in terms of dealing with a very strong currency. Clearly, what they did yesterday was simply not enough.
Isn't the problem here that Japan really can't do anything to control the yen's rise because perhaps maybe it's more of a story about dollar weakness at the moment? I mean, we see the reaction on the market to the U.S. income figures yesterday. People are concerned about the U.S. economy.
That's right. I mean, clearly dollar yen has been driven by relative interest rate expectations, and as long as U.S. economic data is falling off a cliff, dollar yen will tend to grind lower. But of course, the yen is also looking strong against, for example, some of the emerging Asian currencies and, of course, the euro. But
the reasons that people buy the yen as a so-called safe haven, those aren't going to go away no matter what the BOJ does.
Exactly. That's, of course, a challenge you face now. And then the global economy is pointing down at the moment. All that suggests we are going to see a stronger yen until such time where they're really willing to do more significant measures. But I don't think they are that right here.
More significant measures. I mean, that is what people are calling for. What should the Bank of Japan be doing? Should they be buying government bonds?
They could do something like that. They could be more aggressive in their quantitative easing policy. What they did yesterday was a small step in that direction, but they could definitely do more. And the most likely outcome is that eventually they will be forced to do more.
Now, what about the Japanese government? I mean, we've seen a stimulus package come from them. The market seems really pretty disappointed in everything that we got out of Japan yesterday. I mean, that stimulus package, is that going to make any difference at all?
No, I agree. I mean, the market was clearly disappointed on many fronts, and that's the reasons you can say that's the ironic thing about the yen. Always when the market is disappointed about some of the measures being done out of Japan, it tends to lead to more yen strength, and that's clearly what we see now. I think the trend is there, and nothing to suggest that will change until such time as we see more measures or more aggressive measures from the Japanese authorities.
Now, we've got this leadership battle between Khan and Ozawa going on. How much is that, do you think, distracting the government from really tackling these economic issues?
No, I think it is, of course, a concern, but it's a usual pattern we are seeing here where the government is trying to put pressure on the Bank of Japan, and it takes some time before they come up with the measures. But we need to remember that what happened last year, in December last year, the measures there clearly helped to put a floor under the dollar yen, and you saw weakness in yen for some time. And that is likely to be the end game this time around again, but not anytime soon.
How do you explain this constant pressure that we get from the Japanese government onto the BOJ? I heard someone earlier describing the BOJ as being run by a clique of bureaucrats.
No, I think it's natural, right? I mean, Japan is facing a challenging time again, and deflation is there again. It's too much that the currency is also strengthening that much. I think it's a natural pressure coming from the government on Bank of Japan, but clearly the Bank of Japan is not, from a market point of view, in terms of leading to yen weakness, not willing to do enough at the moment.
What's your long-term outlook for the yen? Are you concerned about a funding crisis perhaps in Japan down the road, something that could devalue the yen significantly?
I think on a very long-term horizon, yes, it's something we need to watch out for. And clearly the saving problem balance in Japan is a long-term challenge. But short-term, no. That's clearly not what will be a key market focus in our view in terms of Japan. But longer-term, yes. But I don't think the Japanese authorities will get any yen weakness coming from that front anytime soon.
And Thomas, very quickly, I mean, what concerns do you have about the U.S. slowing down and the impact on Japan and the rest of the world?
No, I think it's significant. I think what we are seeing out of the U.S. now is that the database is falling off a cliff. We have a quite bearish outlook on the U.S. economy, looking for quarterly growth forecast, season adjusted, analyzed, something around below 1% here in the next quarters. And that's going to have a significant impact on the rest of the world because U.S. economy is still by far the biggest economy in the world.
Okay, Thomas Harr from Standard Chartered, thanks very much for joining us.